Hello everyone and welcome to this afternoon's webinar. And David is saying he can hear my voice. Yay! Some setting had been changed on the on one of our headsets and he was complaining he couldn't hear my voice. I said it was a good thing. I mean, he has enough of it in his in his ears. I can't get enough. Yes, he has enough of an ear bashing from me. So being mute occasionally, not such a bad thing. Anyway. Brilliant to have you with us. This is the US, what we call the US session, really day trading, looking at the indices, might look at gold, not sure, but I think we might just stick with the indices today, using volume price analysis and the NinjaTrader platform. But before we start, as always, I'm sure you can see the disclaimer that's on your screen. As you know, this can be a very risky business, so please don't think of using money that you cannot afford to lose. Here we are. I'm obviously the one on the left, Terry's the one on the right. And as well as the NinjaTrader platform, we'll be looking at volume price analysis, how that can help us to interpret what is happening, and much more importantly, what is likely to be happening next. And we're going to be using some of the tools from the quantum trading suite of software, more specifically the ones that we believe are absolutely ideal for day trading and certainly the shorter term time frames. And very quickly, the reason I put this slide up for this webinar is, as you can see here, there's the 4 capital markets. This actually comes from our education program, but it's the Forex trading program. You think, well, why am I looking at Forex when we're going to be looking at the indices and the markets generally? And that is because all these markets are interconnected. And as a day trader, certainly if you are in the US, one of the US indices, I've got the YM, David's been looking at the S&P. The chart will certainly tell you, clearly tell you what is going on. But you do have to be aware, first of all, of the fundamental news that is going to be released. And the good thing about fundamental news, it comes it comes on a regular basis, on a month-on-month basis. But you also have to be aware of how other markets may be impacting the sentiment that is then going to be reflected on the chart that you are trading. And that sentiment can come from bonds, it can come from equity, it can come from commodities, but it can also come from the Forex market, and in particular from the Japanese yen and the dollar-yen pair. There is a very strong correlation between whether the market is buying the yen or not, and whether that is, and how that is reflected in the price action that you can see on your chart. So I'm going to explain that in a little bit more detail when we go over and look at my charts, but I'm also bringing up here, this is the VIX, and we can see here, because this is at a very interesting point. One of the issues we face as day traders is when we are confronted with a price that is in a very narrow range, and it can be deeply frustrating because price doesn't seem to be going very far. It slows down. Are we going to get a trade? What is it going to take to move the price in one way or another so we can get a half decent trade? And one of the things that we can look at, and you should be looking at certainly, and I'm sure you do, is the VIX. And when the VIX is coming down to these lowish levels, they're not single figures, but certainly 14 is a low level, and if it gets down to certainly the 10s and then the 9s, and what you are seeing in the market is you are seeing complacency. And how that translates onto a chart is you will see a trend. It will be going up because this is inversely correlated. So as the VIX goes down, so the indices or the S&P will certainly rise. And if the S&P rises, then the chances are the NASDAQ will be rising, and certainly the YM. But what it tells you is the market sentiment and how that translates into if you like, the momentum, the movements that you see in the chart. It's sometimes called, is it the wall of worry, David? When markets begin to climb this wall of worry, they're very nervous, they're very stuttery. You know, it wants to go higher, but it's, you know, and you may see the volume coming in, but it's more of an effort. And if you're a day trader and you're faced with that kind of trading condition, it can be very, very tough. But if you look at the VIX, just be aware that it is at a lowish level. And of course, if it suddenly turns up the other way, you know, indices are going to go in the opposite direction. They are going to go down. So we're going to have a look at the VIX. And what we're also going to have a look at, and David will show this in more detail, is we've actually developed a couple of indicators to help us pick up this sense of movement or lack of, because when markets are going up, markets always go up much slower than they fall. When they're going up, we've got a couple of indicators. We've got the Renko and we've got the tick speed. And David has workspaces set up, and that tells us, gives us an instant snapshot of basically, is there a lot of participation in the market? Is there, you know, is there a lot of activity? Because if there isn't activity, price is going to struggle. So I'm just going to pass over to David, and then we'll pass over to his screens as well.
Thanks, darling. And let me just turn up my volume, which has disappeared for the time being. There we go. I think that's should be able to. Can you hear me okay? Yep. Perfect. Thank you. Brilliant. Very warm welcome from me, and good to have you along today as well. If this is your first time, a very warm welcome, and I can see we've got some of the regulars in the room, which is great to have you also. And if, as I say, if this is your first time, good to have you along. We run as the two-hander, Anna and myself. We will be switching screens back and forth, concentrating on Ninja. Anna's got Ninja 7, I've got Ninja 8. Excuse me. And we will be happy to answer questions. Sorry, I was just looking at something that's going on the screen. We will be happy to answer questions on air. If they're longer questions, if they're shorter questions, we'll answer them in the chat box for you. So there we go. Do you want to switch screens?
Should I say a couple of things about the YM?
Okay. Anna's got the YM running, which is the futures contract for the Dow, and I've got the ES running on my side on both Tick and Time and Renko. It's a little bit sluggish at the moment, but there has been a lot of strong dollar buying since the release of the news. In fact, the market that's really moving is gold. Maybe dropping on gold as well. It's been a nice move on that. Really just driven through the rise in the dollar, which you can see there on the 20-minute time frame to top left of your screen. The red line that's rising very strongly, continuing to do so. If those of you who were in the Forex session this earlier on, about an hour and a half ago, we were on the dollar Swiss, which had seen some really, really strong buying of the Swiss franc. You can see it there, the green line at the top. And that was purely driven by geopolitical sentiment towards the curtailed meeting between Donald and Kimmy, as we like to call him. And as I said at the time, Anna said the same thing. It's an opportunity. You've got to look for these opportunities. They come along, and their characteristic is always very much the same. They are a short-term opportunity to make some money based on some risk sentiment. The market reacts. It's a knee-jerk reaction. You know it's going to be a knee-jerk reaction. It's not going to last long. It's the souffle effect where the market rises very dramatically and falls just as quickly. That's what you're looking for. We've seen it multiple times in the pound over Brexit. We've seen it overnight with the Swiss franc, and that's what drove it. And it's set up for a classic reversal when we came into the Forex session earlier. And that has continued to deliver, and it's being delivered through both the reversal in the Swiss franc, that calming, that fact of the recognition of fact, if you will, that it was a total over reversal or total overreaction, and now driven by some very strong data on the dollar, which is driving the dollar higher. That's having a reaction in commodities, and it's certainly keeping indices under control. You know, they're not rising. They're sluggish. They're sideways. They've got a slightly bearish bent to them at the moment, purely because of what the reaction in the dollar. But again, you have to bear that piece of news against the broader sentiment towards the dollar, and therefore the indices per se and risk on appetite, because the much broader picture from the Fed, at any rate, is one of slackening off in tone and pace and everything else. So the fact that there is a good number in the market, fine. You're seeing this, but you're seeing it against the backdrop of a toning down in the hawkish sentiment. So whilst it may be very positive as a piece of data, and it is very, very important, and you're seeing the reaction in the dollar today, whether that is going to continue longer term seems unlikely, purely because the Fed and statements from the Fed and their use of language will dictate longer term what is going to happen to the dollar. So this again it's a short-term reaction, I use that in inverted commas, if you will, to a very significant piece of fundamental news, but it's probably just going to be that. It is a reaction, a positive reaction, which is what we expect to see for such good news, but it's not likely to deliver against the broader picture, which carries more weight. You can think of it as an unequal boxing match, if you will, where you've got a heavyweight fighter on one side and you've got a flyweight on the other. Well, at the moment the flyweight is landing some blows, but the heavyweight ultimately will take control of the fight. Sorry, poor analogy, but I'm sure you get the drift. Just going to pass you back to Anna.
Okay, so trying to make sense of where we are in terms of sentiment, and just to we want to try and get a feel for what kind of trading day is it going to be? Is it going to be an expansive one? Is it likely to be one that is going to deliver some nice wide price action with sort of plenty of opportunities, or is it going to be one of those days where, as I said, if you're going to take any points or pips, it's going to be a real grind, as it were. And looking at the VIX tells us that we're in this kind of complacency mood because it's falling, and as it falls, and it falls towards the 10 and even down to the 9, the markets will be climbing this wall of worry. Now, if you look at the price action, this is the Dow. This is over a month, but it doesn't matter whether it's a month or 5-minute chart. The principles are the same. This is the market going up. It's steady. But in the rise higher, you can see these days where you have very compressed price actions. So as a day trader, as an investor, this is great. This is what you want to see. You want to see a nice steady rise, no volatility. But as a day trader, where you're looking to take some money out of the movements, as I said, on a daily basis, when you have these narrow days, it is tough. At the time, if you look back at what the VIX was, it will have been at a very low level. So that is telling you it's complacency, it's greed, if you like, it's risk off. Then we've obviously had its, this was last year. This was when I actually thought, I wrote, is this, the start of the big short, because they had this massive volatility, then on this candle here, the down, and then it came back up. But it's basically, it moved sideways, very wide range. But if you look at the range of these candles, there would have been plenty of trading opportunities in there. Let's come back to this year. This is December's candle, and then we had that huge fright, partly really driven with the Fed meeting. Was it on the 19th, David? Something like that, where the narrative was they would carry on what they were doing. Things were going well, and they would stick to this tightening the path of interest rates rises, and the market just had a complete sort of meltdown, as it were. Then it reversed, because Powell kind of rode back and said, well, it's got to be data dependent, everything's going to soften, From a price action perspective, the reaction that we see after a volatility has been triggered, don't forget, this is the monthly chart. The first reaction is the price goes back to within the spread of the candle. So there was no follow through. There was no follow through here. And in fact, you can see the buying at the bottom. This is January. where it's been in a much happier mood, and as the market has climbed in January, so has the VIX gone down. And this is February. Now, what's interesting with these two candles is, well, first of all, from a chart perspective, we are now back at the volume point of control. We're not back to the all-time high yet for the Dow. I think the next big target is 27,000. First of all, it's over the volume point of control, which is a good thing, certainly from an investment point of view. And this is the monthly candle. This is January, and we had that volume under here. What's not quite so encouraging is the volume has actually gone down. Now, admittedly, the range of the candle is also not as wide as this one. So you could also argue, well, it's probably more in keeping with this candle. But what you have to say is, if this was going to really kind of take off from here, I would have expected. Would you have expected more buying under that candle, David? It's still sort of anomalous. So that's the Dow. Going back to the weekly, you have much more clearly defined levels of support and resistance, and you can see here the candles in this uptrend where you see your wide candle, and you've got a narrowing spread from last week. This is certainly, that would be a cause for concern. So that's kind of the global picture. So you need a global picture. You need to see what the kind of sentiment is, and try and get from that, well, is this going to be a day, is this a reversal day, or at least try and get a handle on what kind of market trading conditions we can expect, you know, moving forward in today's session. It's a bit like going out to sail a boat. We use this analogy all the time. You look at the weather, you see, is the wind coming up? Am I going to be, you know, is it going to be very stormy out there, but I'm still going to go out, or is it going to be calm? But sometimes when it's too calm, that is even more difficult, because, as I said, you know, price doesn't move very much. And certainly last week was a narrowish range. And we go down to the day. Let's go down here. Where are we here? And this sort of really kind of encapsulates it. If you look at the range of these candles, this is tough, but you know why it's tough. The wall of worry, VIX is low. So therefore, you can't just use time charts. You have to look at other means of trying to gauge whether there is going to be an opportunity for at least to take something out of this market. And also, what it also tells you is you're not going to be in it for very, very long. Is there anything you want to add to that, David? Or
no,
you're happy with
that myself.
Pardon? Oh, thank you, sir. And just to go back to the Forex issue, here I've actually got the yen index here, and what I want to see that fall. I want to see a selling of the yen, because that will tell me that at least I have, you know, I've got another factor in my favor for taking a potential position to the long side. And this, as I said, this is where I would use something like the Renker, and the tick speed that David will show you, is that tells you whether how fast how much activity is in there. Is there a little bit of, you know, we want volatility, we don't want too much volatility, but we want enough sail in our wind in our sails to actually take us, you know, from an entry and, you know, half decent profit. I've just come across another a bit of a resource, which I must admit I've never seen before, and just to give you an idea of what I mean by a fear and greed, if you like. And this is from CNN Business. This was highlighted by a fellow trader, and it's a gauge. And it's very interesting. If you look back, you see that it's got this, obviously some kind of meter. Now is greed. Yes, it's positive, it wants to move forward, but you have to, you know, you have to look at the chart and see how much of that is climbing a wall of worry. A week ago, it was still greed. A month ago, neutral. Last year, extreme fear. And, you know, that kind of says it all, really. It's just an interesting little bit of information that, you know, helps to set the picture, as it were. Right, I'm going to pass over to David, and he can, because as I said, he has the tick and he has the Renko as well. His slightly different configuration to his charts. I'll just move over.
Thanks, darling. Oh, hold on a minute. Sorry.
Okay, we did have a lot of interruptions in the last webinar. Unfortunately, we may have one in this one. It's simply because somebody who was supposed to be here in the break hasn't materialized, but I'll try and keep the disruption to a minimum. If we suddenly turn ourselves off, it's the dog's kicking off and that person has probably arrived, but I'm sure David will carry on regardless.
Very old Carry On film, that one. Not sure there was one called Carry On Regardless, but there we are. I'm sure there was. Okay, basically I've started with the time-based, and I've got all three indices up here running in parallel. Let me just move the chat box down the way. There we go. Top left is the YM, middle is the ES, and over on the right-hand side I've got the NQ. And as I said, I've been watching it while Anna's been talking, and you really only have to look at any of the daily charts. In fact, the daily charts are very similar on all three. This is the YM, and we've got this very strong, or relatively strong level of price. What is acting as, well, it was resistance here, it broke through, and now it's kind of perched on there. These tiny slithers of price action. It's acting as support, but boy, oh boy, it's tight up there. It's flip-flopping around on that particular line. In terms of the ES hasn't quite got to that sort of level, which is up at 2,800, so it's got another 11 or 12 points to go. It's peaked over and closed back down, so this is acting as resistance at the moment on the daily. You can see it over here. It just pinged off this level and created this price waterfall. That was back in late November, early December. Now we've climbed all the way back up here. The volume point of control is down here. We've got light volume, but we've got this fairly significant level of price action, which is on the accumulation distribution indicator, which is acting as resistance. Trend monitor's bright blue is what you expect. And, that's where we are for the time being. And then over onto the NQ. Sorry, that's on the 5-minute, beg your pardon. Just on the daily, there we go. Again, a slightly deeper area here. This is a thicker line. This has been tested more repeatedly. There you are, similar sort of thing there. This is the level that is now key. And if that is broken and we get a decent move above it, then the market should take off, because above it is light volume. Below it, we've got some decent price support in place, very light volume ahead. And this is now, we are literally at a point where, certainly from a longer term perspective, at any rate, from a technical perspective at least, that's really what we're looking for in terms of the daily price action. The 5-minute price action, I've got the 5 minutes on all three. Again, pretty similar. I mean, it's almost a carbon copy of what we saw last week, where we're trading very tightly around a volume point of control. Pull that out a little bit. We're trading around the VPOC, which is the fulcrum of the market here. So we've got general price agreement. There's no sentiment, particularly one way or the other right now, to drive this market, and that's why it's rotating around the volume point of control. Volume's building all the time. You can see the VPOCs oscillating up and down as the market oscillates around it, and it's not going anywhere fast at the moment. Same on the ES 5-minute. There we go, exactly the same picture. Volume spike comes in as we open the market. This is 2:30 our time. This is when the US markets get underway. It's 15:41 here. So we're about an hour and 20 into the session. And this is Globex, where we've got the volume has been compressed by what's come in as the exchanges get underway. And over on the NQ, exactly the same. So they're almost carbon copies of one another of the 5-minute time horizons. The market that is moving, I'll go back onto the tick chart. Actually, let me go to the tick charts first. Let's go there first. It'll just be exactly the same picture. You've got volume point of control. You've got not much activity, and this is the ES we're on. This is the 1 minute, the 3 minute, and the 5 minute on the Tickspeedometer. And what the Tickspeedometer is delivering, as Anna said, is about sentiment, it's about participation, it's about sentiment. It's also a blending of the tick chart settings, but giving you the option to read volume simultaneously. So in other words, it's combining the best of both, if you will, whereby we know the precise tick speeds to set our tick charts to, which most traders don't because they don't have a clue, and it varies from market to market and it varies from session to session. But equally, it also allows us to read the volume here underneath the price action, so we can read volume and price, and we can trade off the tick charts over here where the tick charts reveal raw momentum. At the moment, it's pretty sluggish because the numbers here are pretty low. This is as you can see there, literally as I'm talking, it's dropped down to 987, which is this tick chart here. This is the 1 minute equivalent. Up onto the 3 minute equivalent, we're running at 4181, so I'll just change that one over. But that still is pretty low for the ES. If I can just put that in there and type and talk at the same time. And then up onto this chart, which is the 5 minute, that's exactly the same as well. So we'll just put that in for the time being. Trading around the volume point of control, not really going anywhere. Oscillating around red and orange, spikes of green coming in occasionally, but really only on the 1 minute. Down onto the 3 minute and the 5 minute, you can see we're still red and orange. So there's a lot of red here. There's a lot of not going anywhere signals, and that's what we're seeing right now. And again, exactly the same as last week. We have to wait, be patient. I think from memory last week it didn't move anywhere at all during the day. It ended up as a razor blade of price action. Whether we see the same today, who knows? But it's being held down by the fact that the dollar is rising very strongly. We've had the news, which is not supportive of equity markets, so it's no surprise to see them flatlining at the moment with a slightly bearish tone, but then it's sideways for the time being. Market that is moving is gold. Just head over to commodities. There we go. That's been moving quite strongly, driven by the dollar. The top line is gold. We're on the GC April contract now. That we got the 5 minute, we've got the 15 minute, we've got the 30 minute over here on the top line. And then down at the bottom, I've got oil. Again, different time frames. I've got a 30 minute, I've got a 60 minute, and I've also got a Renka over here for oil. And they are moving. What's interesting is that despite, and this is why correlations work, they are always there, but they are not hard and fast. They are not like gears in a car where you can literally say, this is going to happen if I do that. Certainly as far as gold's concerned, if I pop the 5 minute open, the strength in the dollar has been enough to drive gold lower. As you can see, trend monitor's red. We've got really nice price waterfall breaking away here from the volume point of control. We've got rising, the classical relationship between volume and price. We've got rising volume and falling price action, which is what you want to see. We've got a reversal going on. We've got a little bit of buying coming in, but the trend monitor's bright red. We'll look at it on the slower time frames. Bullish engulfing candle coming in on that one, so maybe a little bit of reversal, but up till that point, some really nice bearish price action. Up onto the 15 minute, really reflected there. And when you're looking for opportunities to get into a bearish trend, let's just pull this out a bit. There we go.
I suppose the answer is this: if nothing's moving in one market as a day trader,
well, as Anna said, if nothing's moving in one market, you move off to another. It's one of the things you have to sort out in your own mind. If you're an index trader and that's all you want to do and trade, then you have to accept the fact that there are going to be days, and there have been a lot of them recently, where the market has been very, very difficult to trade on an intraday basis. Certainly with any degree of comfort, it's very much smash and grab, get in, take a couple of points, get out again, whatever it may be in the ES or maybe a handful in the YM. Those are the trading conditions you are trading in, and you trade in that and accept it. If your trading stall is, well, I'm only going to be an index trader, that's fine. That's where we started. We did that for many years. That's all we did was index trading the FTSE 100. Particularly, and then migrating over to the US markets in due course. But we started with the FTSE 100 futures contract. And literally on a scalping basis, we were 5 points. I think the stop loss was 5 points, something like that from memory. But if you're prepared to look broader and look at other markets, then there will always be other opportunities. It's part of the attraction of Forex. It can be a little bit narrow when you're just trading on indices. Up onto the 30 for gold. Reflected there. Sorry, what I was going to say about that particular chart is this. When you're in a bearish trend, these are the candles to look for. Decent volume, effort to rally. We know the market's weak because we're in a bearish trend. We've broken through. We've gone through the volume point of control. We're moving down into lower volume, so we know we're in a bearish phase. Market tries to rally, decent volume underneath. It's a signal to enter. The market is trying to rally. It's looking weak. There's volume driven in. The buyers are just being driven lower by the sellers, driven back below the open of the market, and then the market carries on lower. These are the guys that really, really do pay dividends when you're in a downtrend. They're the ones to look for all the time. That's assuming, of course, you didn't get in higher up in the trend. So if you missed a trend, you're seeing it develop, you've seen a nice trend go past, and you think, I've missed that one. Well, if you see those sorts of candle configurations coming with high volume, it's an opportunity to jump back in, hopefully bag some more points in the remainder of what's left of the particular trend. Just seeing what's going on in oil. A lot of volatility in oil at the moment. Long-legged doji doesn't mean it's going to reverse. It just means you've got volatility. Volatility in bucket load. So that's going to rotate in there. This is just another classic, nice classic trap move on the volatility indicator. That will have gone very fast up the price action and then slid lower. And boy, oh boy, trapped in that one is not the most pleasant thing to be. That's what volatility is. Volatility is a compression of time. It's basically the price action is compressed into a very short space of time. Similar thing on 60 you can see here. The volatility is triggered. We had it in the Forex session. It's triggered in real time. You've got a decision to make. If you're in a position and it arrives, it's telling you the market makers are participating, and it's also telling you that the price action has moved outside the average true range. So you've got a decision to make. Do you close out completely? Do you scale out? What do you do? Or do you ride it out on the expectation? If you think it's going to continue higher, as we did in the dollar Swiss this after the news came out, fine, okay, we've got volatility. We know why it's arrived because we've had an important piece of fundamental data. The expectation on that fundamental news was it's very dollar positive, and therefore we expect the dollar to rise further, which it has. At the time, it was a question of, well, do you sit out the volatility? But you've got some pretty strong inferences that the market is going to continue higher. So are you prepared to set that one out, or do you close out? Or if you're not in, do you wait for it to clear the volatility and then get in? That's the decisions that you have to make. And we've got volatility coming in on oil on the 60-minute as well. You maybe not see it quite so clearly here, but here it is. We've got another long-legged doji candle forming here. So there's huge volatility in oil at the moment. But again, there will be opportunities if you're trading oil as an intraday trader on the tick charts. That will be enough for you. This rally here from where are we, 57 up to 57.40, that may well be enough. Fine. If that's good enough for you, that's good enough for you. It's all about your attitude to risk. And when you look across the gold over on the 30-minute, we've got volatility here. We cleared that one. Then we've got another ton of volatility coming in here, and that's why we're seeing the market pause here. If we break to the downside further, we've got strong volume under this last one as well. Rallied up to the volume point of control, back down, closed. Ton of volume under it. Very bearish at the moment. Just waiting for the congestion price action to pass. If it breaks to the downside further, then there'll be another opportunity to short the market again. And really just looking at the 5-minute, back up onto the 5-minute to reinforce that point, look at the volume that's fallen away on that rally. It's pathetic. The volume here is almost comparable. In fact, we've had volume in Globex here, which is higher than volume over here. So it's really telling you that this is pretty weak right now, this little rally. If you're looking to continue short and get into another short position, let's just head over to see what's happening on the currency indices. Dollar's come off a bit. This is the dollar in the center. This is on 15-minute. That's why you're starting to see a little bit of a reaction, a reversal in gold. It's a question of whether that continuation of strength in the dollar is going to continue. And it all comes back to what I said earlier, that it's the two fighters, but you've got the heavyweight who's, the massive heavyweight in the one corner, and you've got this little flyweight fighter in the other who's punching well above his weight right now. But, ultimately, is it going to be the heavyweight that's going to take control? And the answer is yes, provided, obviously, that the Fed continue with their rhetoric and what they've been saying to date. Just to the yen on 15, The yen's continuing to slide lower. It's not moving with great rapidity, but it's certainly moving lower. That should help to push equity markets higher, but then equally they're being held down by the strength of the dollar. So that's why you're partly seeing this oscillation around the volume point of control all the time with no great sense of direction either way. Let's go back to the time-based charts. Okay, let's see if we're getting any direction right now. Let's just pop the 3-minute open. You know, you've got an absolute ton of price resistance overhead here. This heavy red dashed line is telling you on the accumulation distribution indicator that this market has been tested, retested many times. You probably can't see it over here, but on the right-hand side, the indicator actually prints the number of times that level has been tested, either from above or below. If it's from below, it's red. If it's from above, it's blue. And then it acts as the inverse, either support or resistance, once the market breaks through in exactly the same way as you would expect. But this is a heavy area of resistance. This level here, which could have acted as support, is now acting as resistance as well. So you've got two levels, one below the other. And we've now got a very minor level here, which is acting as support. We've gone through this region. We've gone through here. We've now got a very light area of potential price support here. That's been tested 3 times here. If it's breached, then there's further downside to come. But that is a minor level. It's not a terribly strong level at the moment. Just move that out the way. There we go. Up onto 5. What have we got on 5? Similar sort of picture. We've got trend monitor's red, so it's moved to the bearish sentiment. Weak candle, effort to rally, pivot on the top. Potential platform of support here. That's been tested 4 times from above, and this one here is very minor, so it's not going to have a huge impact. Let's have a look at the 10-minute, see what the 10-minute is telling us. Well, we had volatility to the upside and a reversal to the downside. Then we had volatility to the downside at the open and back up. So we're still trading inside this particular candle. So it's really a question of waiting and being patient for a move beyond this level. Again, you've got very strong resistance in at 27.92. Not so much in terms of support below, in terms of price action, but an awful lot of volume around. In fact, it goes way over there. A huge amount of volume around this region because it's been trading around this level for some time. This is not just an intraday thing, as we saw on the daily. We've been trading in this region around here for a long time. There is a huge amount of volume built up here on these faster time frame charts, which is why it extends so far out to the left of the chart, because we've been trading here for so long. It's building on the daily, but it hasn't exceeded the level down here, which is where the VPOC is right now, and that's what we're waiting for. This dam to burst, whichever way it does indeed move. Just go back to the tick charts for a minute. Let's just see if we've got any particular activity coming in there. Move that out the way. Little bit of a pickup in activity there, but the tick count is still very low. We're running at 1597 on this one, or 1400 if you want the actual, 1403. We've got 2100 here on the 3-minute, and we're running at 2297. So there's very little difference between the 3-minute and the 5-minute. And in addition to that, these numbers are seriously low, given that we're on the ES, where this number should be anywhere up to 8, 9, 10,000, and this number here down on 5 minutes should be 15, 16,000, maybe even up to as high as 20,000 when the market's really moving. And the tick activity alone tells you that we're not going anywhere right now. That's it. We just have to be patient, sit on our hands, and wait for something to come along, or we go and look at an alternative market to see if we can find some price action and some activity. I'm just scanning around. Let's just have a quick look at, let's go back to commodities for a minute. Go and see what's happening on the gold market. Not a lot. The volume's falling away. It's even falling away on these two candles. So the market's trying to rally, but really not getting very far. Just move that out of the way. A little bit of buying coming in on 15. Some decent volume under here. Wick to the bottom. Market's rallied. Selling, however, in the top of the wick, so there's no real strong follow through. But there was some buying in that candle, so that's what you're seeing on 5 minute right now. And up onto the 30 minute. Let's widen that out, make that easier to see. So, we're waiting for the congestion phase to build and develop. Let's go back to the time frames again. Okay. Let's go back to just have a quick look at the CSI, see what's going on there. This is on 15. That's on 5. The yen here is flatlining around on the oversold, so it is selling off, but it's this dollar strength which is holding everything at the moment and capping what is going on. If that starts to roll over and we start to see some dollar weakness coming into the market, then that may be sufficient, provided the yen is still selling off. That may be sufficient to see equities rise a little bit, but I don't think they're going to rise very strongly, given the fundamental news that went through the market just over a couple of hours ago. Let's go back. There we go. And as an intraday trader, this is really what it's all about. You're sat in front of the screens, you're hunting around, you're looking at all the associated markets, you're trying to pick up all the clues and signals, put it together in your head, put it together in the context of what has gone on longer term, etc., and you've got the technical picture, and then just really try and figure out, do I want to be trading this market or not? Do I want to be end up as chopped liver or not? And that's the decision you've got to take. And as I said last week, when it's trading like this, you've got to set levels. You've got to look at the technical chart and take the 5 minute, for example. Very spiky. But again, you've got to remember, this is all fairly distorted. If I scrunch that down a little bit, we're talking about a range from 10 points from here to here. So this is not a big range. This is a tight range, and that's where we are at the moment. So it's a question of waiting for that range to be breached with volume, and then looking at the opportunities available, which will hopefully develop into a stronger trend. But for the time being, it's a question of trading, or the market is trading in this 10-point range, and it's not coming out of it for the time being. And if it does, then it's a question of how far away from any particular level that you've set. For example, if you think 27.93, okay, well, once we break through that region, if we see a break and hold above that region on good volume, that's good enough for me to get in, fine. Equally to the downside, just move that out of the way, down at, where are we, 27.83 odd. If we see a break and hold below that level to the downside, is that good enough for me? How many points do I consider to be good enough? Is it 1, 2, 3, 4, 5? What is it? It all depends how the candle is shaped. If you see a candle that breaks through that region and it's got very small wicks top and bottom, in other words, it's a solid candle, you get something like this, then that's a positive sign, as long as it's not associated with volatility. That's a positive sign that sentiment is pretty much universal through that particular piece of price action. If you get wicks top and bottom, then equally it's a signal that perhaps it's not as strong as it should be, and maybe it's not a risk worth taking. You've got to wait for a stronger signal to develop in terms of the price action candle. Down onto the 30 minute, really says it all. Long-legged doji, daddy legs candles, that's it. Sat on the volume point of control, really not going anywhere. And that's the daily. Let's just go back to the tick charts. Won't be saying anything different other than really just confirming that picture. 987, 1597 and 2584, very, very low tick counts for this particular index. You'd expect to see that on a YM. You don't expect to see that on the ES, which is generally 10 times the activity, if not more, of the other two. Let's go back to our, oops, sorry. Let's go back to the indices again. That's the yen. That's the dollar in the middle. Coming off a little bit. That's the euro on the right hand side, which we haven't looked at, but that's, we had some very strong euro buying. That's now flatlining, gone into congestion for the time being. That's the yen. And those are the three indices which really just govern everything. Back to the time-based charts again. And from a volume perspective, it's really just, we talked about benchmark candles and price action last week, but when you're looking at this, and you're looking at a candle like this, for example, which catches your eye, you think, okay, that's a nice widespread up candle, decent price action, no wicks. What's the volume like? You look at the volume on here. So you look at that and you think, well, what can I compare that with in my time horizon? In other words, from here to here, because this is comparative. You can't take it outside here anyway. But in terms of comparing it, you look at the volume associated with that candle. Is that what you would expect to see or not? And the answer is it's very low because this price action is wide. If you look at, let's have a look at, let's say that candle, for example, or this one, not exactly comparable, but nevertheless, decent price action, probably about half of this candle, maybe 2/3, and look at the volume under it. That's the volume. So for this sort of move, you would expect to see more significant volume than you've got here. It just, again, signals that this is a fragile market that is really not going to rally very far. If that candle had arrived and you'd seen a nice wide high volume bar, probably something like this, I would suggest, albeit that we are moving in deeper into the session and therefore naturally you get an attenuation in volume anyway. You always get a big move in volume at the start, and it tends to drift lower throughout the session. Not always, but typically it does. You would expect to see something like this, or perhaps something like this, but this sort of volume here is way too low, and it's just, again, signaling the lack of participation. Equally, you could say the same to the downside candles. A wide candle like this, would you expect to see more selling pressure than that? Yes. So in a way, what you're seeing there certainly from a volume price analysis perspective is just really what you're seeing on the tick charts, which is a lack of participation, and really just reinforcing the fact that you're trading around this region because price is in agreement. No one's really taking the bull by the horns, excuse the pun, but no one's really grabbing this market. The big operators are not moving in here en masse, either one way or the other. It's just flip-flopping around in this sort of desultory state. And until the volumes pick up to the upside or the downside, that's the status quo for the time being. And that's reflected in the volume, both upside and downside. This candle that's forming at the moment, under normal conditions, a widespread candle like this, what are we talking about? I know 2 or 3 points on the ES. When that candle closes, we'll get the volume profile, and we'll see. If it's heavy selling, then we might expect to see this market break to the downside. But if it's just sort of thin volume as here, then the answer is probably not. I've got this set up on Ninja so that the volume closes on the close of the candle, only because it just makes the load on the system a bit lighter, because we've got the GoToWebinar running and also all myriad of charts and all sorts of stuff in the background, so it just makes the load a little bit lighter, that's all. But you can have it updating in real time. Just change the settings. I'll come back to that in a minute when that closes, maybe. Sorry, let's move that out of the way. And as always, patience. Hard being patient. And I said it last week, and I'll probably say it again many times. But at times you do have to be patient and just wait. Just keep an eye on this one. Just want to see what the volume's like on this candle, this 3-minute candle. The trend monitor is certainly signaling bearish sentiment. It's not signaling bullish sentiment right now. We're red on 3, we're red on 5, and we're red on 10. The 30-minute, as you can see down here, we're just in a transitional phase. We had a rally, and now we're transitioning, we're rotating back to darker blue, possibly into darker red, and into bright red in due course. Okay, that candle's closed off. What have we got in terms of volume? Well, a little bit of an improvement. So we've got some selling there, but it's not terribly strong. But it could be enough to, if the next candle's a decent candle with some decent volume under it, maybe enough to drive it lower. But again, looking at it, you look at the volume up here under this candle. It's actually much more significant, the volume, and the spread is narrower. So we've got almost 1.5 times price action, but yet the volume is almost half what it was over here. So again, doesn't look as though it's ready to break to the downside right now. Got some pretty weak support in here. It's kind of got through there. There's another little level just here which you probably can't see, but again, very minor, not terribly significant. Let's just go to the tick charts again. Still trading at very sluggish speeds. Change this one down. This was way too high, 1597. So we're running at the right tick speed. Most traders guess because they don't have the Tickspeedometer. They'll just put in a figure that maybe they were given by somebody in a forum or a colleague or whatever it might be. 2584. And then they'll set it for the day and that'll be it, job done. Well, as you can see, tick speeds change literally second by second, excuse the pun, but they do. And that's why we deliver it with these two settings, because this changes less frequently. This is the actual, which changes literally, as you can see, second by second by second. This is constantly changing, which is why we set this one. So when you're trading in the markets as now with the physical exchange running with Globex, it's more comfortable to set it to this number, which stays fixed for a little bit longer. As you can see here, we've got 987 for the 1 minute, 1597 for 3, and 2584 for 5. These are the actuals: 987, 1622, and 2250, but they are changing literally all the time. So it's much less onerous to set them to the fib number, which is what I do. It's nothing to do with Fibonacci, other than it was a mechanism for us to calculate numbers using a mathematical system close to the actual, and that's what we use just to deliver that particular number. But it's got nothing to do with Fibonacci levels, other than we use it as a mathematical tool, if you will. So there we go. And it's clearly not ready yet to move away. And if we go back to our 3-minute chart again, and that was the volume under the down candle. really not sufficient to drive it through. Then we've got the up candle, again, relatively light volume, weakness to the top of the candle. Just a question of being patient and waiting for the market to break. The breakaway will be signaled by volume. Then you're bringing in all the other tools, a trend monitor, you're looking at support and resistance regions, everything else to help you get into a situation where you can trade comfortably with a strong move away. The trend monitor signaling bearish, it's red, 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 dark blue here, so we're in a transitional phase, and you're looking at the daily for confirmation. What is going on here? Is this looking strong at the moment? It's looking relatively weak. I'm going to pass back to Anna at that point.
Fantastic, and even better that we've actually managed to get through the session without dogs barking, doorbells going, phones ringing. So I better sort of stop while I'm on a bit of a roll, as it were. As David said, it's another tough one today. As we can see here, I've got the 3-minute on the YM, and it's as I said, all I can see is I've got the volume point of control. When you see these, what we call piano keys, the down, up, down, down, then you get another set of piano keys. The overall is, I would say, bearish. Would you say, David? Yeah, it's got a very sort of bearish feel to it, bias to it. And you think, well, is that going to carry on? Then this is where you'd have to look at something like the daily chart and, what is the low of the session? And if that gets taken out, then possibly we could kind of see some momentum. There's no more news out. So it's also end of month. It's the last day of the month. So you're going to have a lot of position squaring. So, there are a lot of other factors to consider today, as it were, not just the fundamental news, the sentiment. As I said, it is the end of the day, and tomorrow is the beginning of March, the first day of March, St. David's Day. Hey, great. His name's day, which is lovely. And there's no NFP. NFP is next Friday because they won't have had the time to do the data. So, as I said, patience is the watchword, but nothing looks very healthy at the moment, does it, David? Doesn't look good on the longer term charts. And as I said, because it's been climbing this, what I call this wall of worry, since we had the dramatic turnaround at the end of December. That's how markets operate. All that remains for me to tell you, I know we have some of our users in the room anyway, but I know there are some people who've maybe not been along before. The tools, the indicators we talk about are from quantumtrading.com. The details are over here, and you can see this the MT45, NinjaTrader and Trading View. But we are also going to be looking at TradeStation. That's the next big platform that we're going to develop. And the NinjaTrader tool, especially for this session, is what we call the day trading package. And it's really everything other than the Forex one. And you can see here the whole package comes to 749. It's actually reduced from 1400. If you were to buy every single indicator individually, then that's what it would cost you. But if you buy it as a whole package, it's 749. However, you don't have to do that. It's not either one or the full package. We do actually offer them in smaller bundles. So then we have coupons. So if you're interested maybe in just the volatility and the tick speed, or you want just the Renko, we sell a lot of Renko optimizer indicators because it just makes life so much easier for day traders. You can buy them, as I said, on an individual basis. And on the indicators themselves, if you click on the indicator on the front page, it will take you to a page such as this one. This is the volatility, and here you will find all the support pages and the videos just to explain a little bit more of how the indicators work, why we developed them, and really what they can do for you. That's us done for the day. We are back on Tuesday for the London session. I always say this at certain times of the year, but I know it's been a bit complacent in terms of equities. I know there's all sorts of things bubbling in the background, but I can assure you in sort of mid part of next week, we can expect a lot of volatility, lots of fireworks in the market. So it doesn't, you just have to get through these, what are called in sailing terms, the doldrums. You get a little bit of wind and then it calms down again. Don't worry. The volatile times will be along, and they're going to be along fairly soon, by about the middle of next week. We're back on Tuesday. Enjoy the rest of the day, enjoy tomorrow, and have a great trading week. I think there's any more questions? No, that's fine. That's lovely. Let's just say thank you so much for coming along, and we'll catch you next time. Take care.